Chapter 16 today. Chapter 16 starting on page 794 for those of you who have a book. Otherwise, it's just the job order costing chapter. And I wanted to review the journal entries because much of what your homework asks of you is journal entries. So I wanted to talk a little bit about raw materials and work in process and finished goods inventory to start, and then really work on some of those journal entries. So let's start. So this is going to be chapter 16, job order costing. So we learned about some of the terms in chapter 16 in the last chapter. One of those was all about raw materials. And remember, in the majority of the chapters, we're going to be creating a good, right? So it's not about a service, it's not about a merchandising type company. We're a company, and we're analyzing companies and doing financial statements for companies that create their own goods. In chapter 16, it will be creating their own guitar. So they're making guitars in this chapter. So raw materials for a guitar, assuming it's kind of an acoustic guitar, would be, you know, the wood or fiberglass that goes into that, the strings, the twist, metal twists for tightening the strings, and things like that. So raw materials is going to be what you're going to start with. Then once you start working on the good, it turns into work in process. Okay, and then you work on that good. So you're building that guitar. It could take 2 hours, it could take 2 days, it could take 2 weeks. So depending on the type of guitar you're making, the process of building that good is called work in process. Now all of these are followed by the word inventory. And then lastly, when you're done with the good, when you finish creating, in this case, the guitar, you've got what's called finished goods inventory. Okay, so let's start at the top with the purchase of raw materials inventory. Now, I'm not going to teach you how to do a journal entry. I'm going to assume you already know how to do that. So the purchase of raw materials is going to be to debit raw materials inventory. That's my abbreviation for inventory. And you're going to credit either accounts payable, likely, or cash. So that's how you acquire your raw materials, right? You're going to debit the asset, the inventory, and your credit going to credit however you paid for it. Now, when you move the raw materials into process, okay, so when the raw materials move into the process of work in process inventory, you're going to debit work in process, and you're going to credit raw materials. Okay, so when you move your goods, your raw materials that you just purchased up here, into the process, right? You move it out onto the process floor. You start working on those goods. You're going to debit an account called work in process inventory, and you're going to credit raw materials inventory. That's for the materials. Okay, that's the first way that you're going to debit work in process inventory. All right, the second way to debit work in process inventory, and this is putting in goods, right? So this is putting in raw materials into the process. And this, in number 2, is going to be putting direct labor. So once you add the direct labor, you're going to debit again work in process inventory. And you're going to credit, in this case, wages payable. Okay? So that's going to be the debit and the credit for the 2 different times, 2 of the 3 that we're going to debit work in process inventory. Now, the last thing you're going to add into the process, remember everything else when we talk about factory overhead. So everything else is going to be kind of entered in one transaction. And so that's going to be the rent, the utilities, the factory supervisor salary, any indirect material, indirect labor, that sort of thing. You kind of all add within factory overhead. So whenever you add your factory overhead into the process, that's going to be the 3rd time you debit work in process inventory. You're going to debit work in process inventory. Remember, this is the same account, so you're debiting the same account 3 times. One for raw materials, one for direct labor, one for factory overhead. Remember the 3 different product costs. So I'm going to debit work in process inventory, and I'm going to credit factory overhead. Okay? And those are the 3 times you're going to do that. Now, when you debit work in process inventory, this is actually going to be for applied factory overhead. We'll go over that in a little bit. But those are the 3 times that you debit work in process inventory. Now, once you're down, in fact, I'm going to erase this just to make it a little, seem a little bit better. Once you're done, right, so here you've purchased your goods, right, paid either on account or cash. You've put the 3 different product costs into the process, right, and now you're done. Let's just say you worked on the guitar and now you're done. So now you're going to move the inventory from work in process to finished goods inventory. And when you move it into finished goods inventory, you simply debit finished goods inventory. And you would credit just the one account, work in process inventory. Okay, so just to recap some things that we've learned in chapter 1 as well. Here are our 3 different product costs. 1, 2, 3 different product costs. We've got our direct materials, right, in the form of raw materials, our direct labor, and our factory overhead. These are how these 3 things get into the process. Here's the transactions that you need to know, right? So we purchased the goods, we put the goods into process, and then when we're finished with, in this case, the guitar, we're going to move that one guitar or batch of guitars into finished goods inventory, okay? And then we've got a debit to finished goods inventory. It will sit in our finished goods inventory until we sell it. Once we sell it, right? Once we sell the guitar, then we go back to what we learned in financial accounting, and in chapter 2, selling a good, right? And so for this case, we would debit either accounts receivable or cash, credit sales revenue, and we're going to debit cost of goods sold, sorry, I didn't write cost out for habit. Cost of goods sold, we're going to debit cost of goods sold, and instead of crediting inventory, which is what we learned in financial accounting, we're now going to credit finished goods inventory here. All right, and that's how we go through the process for job order costing, how we purchase our materials, so from very beginning, our raw materials, how we get them into the process along with our direct labor and our factory overhead, when we transfer that into finished goods inventory, and then we sell a product, then we start the process all over again. And the next segment, I'm going to do a homework problem for you. Thanks.